Today we're covering several major developments across the crypto industry. From the Trump administration confronting banks over crypto access, to a government seed phrase leak that drained millions, to mining expansion in the United States, and even central bank blockchain experiments in Japan. We'll also talk about how the crypto market is reacting to rising geopolitical tensions involving the United States and Iran. Let's break down the biggest stories shaping crypto right now. The Trump administration has escalated its confrontation with major banks over how they treat cryptocurrency companies. Officials say some financial institutions have been restricting or blocking access to traditional banking services for crypto firms. The administration argues that this behavior could slow innovation in the digital asset industry and undermine broader plans to make the United States a leader in crypto. This debate is closely tied to proposed legislation like the Clarity Act, which aims to create clearer rules for how digital assets are regulated and how crypto businesses interact with traditional finance. From a market perspective, this type of regulatory pressure can cut both ways. If banks are forced to open access to crypto companies, it could accelerate adoption and make it easier for exchanges, stablecoin issuers, and blockchain startups to operate in the United States. But if the regulatory fight drags on, uncertainty could slow institutional investment. For crypto markets, the key takeaway is simple. Banking access remains one of the most important bottlenecks for industry growth. Our second story is a reminder of how critical security is in the crypto world. South Korea's National Tax Service reportedly leaked a crypto wallet seed phrase in a public press photo. Because seed phrases provide complete control of a wallet, attackers were able to quickly access the funds and drain roughly $4.8 million worth of seized cryptocurrency. This incident highlights one of the fundamental rules of crypto custody. If someone has your seed phrase, they effectively control your funds. It doesn't matter if the wallet belongs to a government, a company, or an individual. This kind of mistake is rare, but it shows how crypto security relies heavily on operational discipline. For investors, the lesson is simple. Never expose your seed phrase, and always treat it like the master key to your assets. Real quick before we continue. Stories like that seed phrase leak highlight something every crypto investor should take seriously, and that is custody. If you leave your assets on exchanges or fail to secure your wallet properly, mistakes or hacks can happen. One option many users are turning to is the Best Wallet app, which focuses on secure crypto storage while still being easy to use. It allows you to manage multiple assets, control your private keys, and keep custody of your crypto instead of relying entirely on centralized platforms. If you want to check it out, the link is in the description and the pinned comment. Now let's continue. American Bitcoin expands mining operations. Next we're seeing continued expansion in the Bitcoin mining industry. Mining company American Bitcoin has reportedly added new mining machines and expanded its total hash rate capacity. In simple terms, hash rate represents the total computing power securing the Bitcoin network. When companies invest in more mining hardware, it usually signals long-term confidence in the network. Mining is an expensive business. It requires electricity, infrastructure, and large capital investment. So when mining companies scale operations, they're essentially making a bet on Bitcoin's long-term value. For the broader ecosystem, rising hash rate generally means a stronger and more secure network. Another area many investors are watching right now is early-stage crypto projects. One project getting attention recently is Maxi Doge, which is currently running a pre-sale. According to the project website, the token is priced at around 0.00028 per token, and the pre-sale has already raised several $1 million so far. Maxi Doge positions itself as a high-energy meme project focused on the culture of extreme crypto traders. Looking at the tokenomics, a large portion of the supply is allocated toward marketing and ecosystem growth, which is common for projects trying to build early momentum. As always with pre-sales and meme coins, these carry significantly higher risk than established assets like Bitcoin or Ethereum. So if you're exploring early opportunities like this, make sure to do your own research and understand the risks involved. If you want to learn more about Maxi Doge or check out the pre-sale details, I've also left a link in the description. Alright, with that out of the way, let's get back to the bigger crypto market developments happening right now. Bank of Japan exploring blockchain for reserve settlement. Our next story shows how blockchain technology continues to move deeper into the traditional financial system. The Bank of Japan is reportedly exploring the use of blockchain technology for reserve settlement between financial institutions. Central banks around the world have been experimenting with blockchain for several years. The idea is to modernize how money moves between banks, potentially making settlement faster and more transparent. These initiatives do not necessarily involve public cryptocurrencies like Bitcoin or Ethereum. However, they demonstrate that even the most conservative financial institutions are exploring blockchain infrastructure. And historically, when central banks experiment with blockchain technology, it tends to increase overall legitimacy for the broader crypto sector. Finally, we need to talk about how crypto markets are reacting to rising geopolitical tensions. Recent strikes and escalating conflict involving the United States, Israel, and Iran have pushed global markets into what traders call a risk-off environment. Traditional safe haven assets like gold have seen increased demand as investors move away from risk during uncertainty. Crypto has reacted differently. Bitcoin initially experienced volatility as traders reduced exposure and liquidations hit leveraged positions. But unlike traditional markets, crypto trades 24 hours a day. That means it often becomes the first real-time indicator of how investors are reacting to global events. In situations like this, Bitcoin tends to behave more like a high beta risk asset in the short term. But if tensions stabilize, markets often refocus on crypto fundamentals like ETF flows, institutional adoption, and the long-term supply dynamics of Bitcoin. So today's crypto landscape is being shaped by several different forces. Regulation battles in the United States. Security lessons from a major government crypto mistake. Continued investment in Bitcoin mining. Central banks experimenting with blockchain infrastructure. And global geopolitical events influencing market volatility. The crypto industry sits right at the intersection of technology, finance, and geopolitics. And that's why stories like these matter for investors. Because every one of these developments has the potential to shape how digital assets evolve over the coming years. If you want to stay updated on the biggest crypto stories and market reactions, make sure to subscribe and turn on notifications. And let me know in the comments which of these stories you think will have the biggest impact on crypto going forward.